Hey everyone, and welcome back for another deep dive. When we started this show, we promised we'd tackle the big questions head on, the ones that keep investors up at night.
And there are a few topics hotter right now than this whole Bitcoin versus gold debate.
Right. I mean, it's everywhere you look, right? It's like old school versus the future, but which one is the better investment? Well, to help us sort through all of this, we're diving into some really insightful analysis from the Best Bitcoin Data Show. They've got some fascinating takes, and they're backing it up with some serious data, which we love.
Yeah, and they go way deeper than just, will Bitcoin go up? They're looking at the whole picture like, have you heard of miner revenue?
Minor revenue. Okay, not gonna lie, that sounds a little intimidating.
I know, right? But it's actually really cool. It gives us this whole different way to understand what's going on with Bitcoin and maybe even predict where it's headed, but we'll get into that a bit later.
Okay, so minor revenue, I'm intrigued. But before we jump ahead, let's set the stage. We've got to talk about gold, right? The OG safe haven, the classic choice when things start to get a little shaky in the world. It's been the go-to for like, what, centuries?
Yeah, gold has this really enduring appeal, and for good reason, right? It's seen as intrinsically valuable. I mean, it has real-world uses beyond just being a shiny metal, which is kind of cool.
Right, it's not just about speculation. It has that tangible value.
Exactly. Plus, there's a limited amount of it on Earth. You can't just print more gold, unlike, well, certain currencies we all know. And that scarcity just adds to its allure, especially when you've got inflation rearing its ugly head.
Yeah, you know that feeling when you're holding something physical, like gold, and it just kind of whispers, it's going to be okay. It's reassuring.
Totally. But then you've got Bitcoin bursting onto the scene, all digital and disruptive and promising, well, potentially life-changing returns. And honestly, it's delivered some pretty mind-blowing gains, even in a short period.
It's been a wild ride, that's for sure. A lot more volatile than gold, but that volatility is part of what makes it so exciting.
For sure. And that's where the Best Bitcoin Data Show comes in. They really dig into this head to head. And get this, they're using data science to back up their predictions.
Data science, huh? So like algorithms and stuff.
Exactly. They're using this really cool method called quantile regression to make sense of all this.
Quantile regression. Okay, gotta be honest, sounds a little intimidating. You're gonna have to break that down for me.
I gotcha. Imagine you're trying to predict, say, how many points LeBron James is going to score in his next game, right?
Yeah.
Quantile regression looks at his past performance, like how much sleep he got, if he had his Wheaties that morning, all the important stuff.
So you're saying by analyzing all those past patterns.
We can get a better idea of how he might perform in the future. And it's the same with Bitcoin. They've taken this quantile regression method, applied it to Bitcoin's price history, and get this. They're predicting that by 2030, Bitcoin could reach somewhere between $550,000 and $600,000.
Okay, so that's a big if though, right?
Yeah.
Because Bitcoin, as we know, can be a bit of a roller coaster.
For sure. Bitcoin's notoriously volatile, but even if it only reaches like a fraction of that projected price,
Yeah.
it's miles ahead of where gold is predicted to be.
Which is?
They're estimating around $4,400 an ounce in 2030.
Okay, so that's a huge difference in potential growth. But then again, gold, that's the tortoise, right?
Yeah.
Slow and steady.
Yeah, exactly. You've got to weigh the potential rewards against the risks.
Right. So gold might be more stable, but
Yeah,
Bitcoin...
Bitcoin has that potential for those like exponential jumps.
Yeah, it's a tough choice. But whether you're team gold or team Bitcoin, I think we can all agree on one thing that's kind of a big deal for any investor. Inflation.
Ugh, tell me about it. It's like that silent wealth killer,
Seriously, it's like a leak in your tire. You might not notice it at first, but it's slowly draining your purchasing power over time.
And that's where gold has traditionally shined, right? That's why people turn to it as a hedge against inflation.
Right, because when prices go up, typically the price of gold tends to rise too.
Yeah, they sort of track each other. In fact, they highlighted on the show that gold's had this long-term growth rate of around 9%, which has basically kept pace with inflation.
Okay, so that makes sense. But Bitcoin, this whole new kind of asset, how does it measure up against inflation?
That's where things get really interesting. Remember, we were talking about gold having a limited supply.
Right.
Well, Bitcoin takes that concept to a whole new level because
there's only a certain amount of Bitcoin that will ever exist.
Exactly. Only 21 million Bitcoins will ever be mined. That's it. That's all.
So you're talking about digital scarcity.
Exactly. And what makes it even more intriguing, it's decentralized,
Yeah.
meaning that no single government or institution can just step in and like manipulate it or print more of it like they can with traditional currencies.
Okay, that's a key difference, right?
Huge difference. Unlike, say, the US dollar, which is controlled by the Federal Reserve, Bitcoin operates on this global network. It's like a digital gold rush out there.
Okay, I gotta admit, you're really selling me on this whole Bitcoin thing.
Haha.
But, okay, we can't put off this minor revenue thing any longer.
Ah, yes.
You were saying that the best Bitcoin data show really digs into this. How does this all connect the miners and Bitcoin's price?
So they argue that by looking at miner revenue, we get this unique window into the sentiment surrounding Bitcoin. It's not just about price speculation, it's about understanding the network's underlying dynamics.
Okay, so in plain English, what's the link between what these miners are making and whether Bitcoin's about to take off or not?
It all comes down to something called the price to sales ratio.
Price to sales ratio. Okay, another one of those
I
terms.
know, right? But stick with me, it's actually pretty simple. Imagine like a lemonade stand.
Okay, I like lemonade.
Right. So say this lemonade stand is valued at $1 million.
$1 million for a lemonade stand.
Right.
Okay.
Yeah, maybe they're using some secret recipe. Who knows?
Yeah.
But they've only made like $10,000 in sales. That would be a really high price to sales ratio.
Meaning that people are really, really optimistic about the future of that lemonade stand.
Exactly. They're saying, we believe those lemonade sales are about to skyrocket, even though they're tiny right now. And it's the same with Bitcoin. When the price to sales ratio is high, meaning the overall market value of Bitcoin is way up there compared to how much revenue the miners are generating.
It means people have a lot of faith in its potential.
Precisely. It's like a measure of market excitement or belief.
Wow, so I never thought about it like that.
Yeah, it's a different way of looking at it. And get this, the best Bitcoin data show, they actually highlight how this very ratio has been a surprisingly good indicator of those past Bitcoin booms.
Really? Like back in 2017 when it went crazy.
Exactly.
So if we look at those past Bitcoin peaks, like 2017, what did that price to sales ratio look like?
So they dug into the historical data, and this is where it gets super interesting. They found that during those periods when Bitcoin was really taking off, like back in 2017, even earlier in 2013, the price to sales ratio was significantly higher than it is right now.
So that means, what, we haven't even seen Bitcoin's full potential yet. Is that what they're saying?
Well, that's the million-dollar question, isn't it? The analysts on the show seem to think that, yeah, if Bitcoin keeps moving the way it has been, and if more people, more businesses really start using it, that price to sales ratio, it could climb even higher.
Okay, so not to get too excited or anything, definitely not financial advice here, but this is all pretty fascinating stuff.
I know, right? And that's what I love about the best Bitcoin data show. They're not just throwing these wild predictions out there, they're backing it up with real data, and they're giving you the tools to draw your own conclusions, which is huge.
Absolutely. All right, so let's step back for a second. Big picture time, right? We've covered a lot of ground in this Bitcoin versus gold showdown.
Oh.
So we started with gold, the OG, right? Safe, reliable, been a haven for investors for like, what, centuries?
Right. We talked about why it holds its value. It's got that intrinsic value, there's a limited supply, and it's been a decent hedge against inflation over time.
Right, but then we have Bitcoin crashing onto this scene like a digital rock star, promising those massive returns, but also bringing with it those massive price swings.
Definitely a wild ride.
But it's also got that fixed supply, and it's decentralized, which, as you explained, could make it even more resilient to inflation than gold. It's a fascinating concept.
It really is.
But, we've got to acknowledge the elephant in the room. Bitcoin is still a relatively young market.
Right, it is.
And there are always risks involved.
Absolutely. And that's why it's so important to be informed, to do your research, and to understand what you're getting into.
And that's what this deep dive is all about, right?
Oh.
Helping our listeners navigate these complex topics. So, to wrap things up, where do we stand on this whole Bitcoin versus gold debate?
There's no one-size-fits-all answer, right? It really depends on your individual goals as an investor, how much risk you're comfortable with, and what your time frame looks like.
Right, because if you need that security, that peace of mind.
Gold might be a good fit. It's been a safe bet for centuries, but for those investors who can stomach a little more volatility, who are maybe looking for those higher potential returns.
Bitcoin might be more their style.
Exactly. But here's a final thought, something to chew on, right? We talk about gold being the classic safe haven, but what happens if Bitcoin gains wider adoption? What if it stabilizes, becomes less volatile, proves itself as a reliable store of value over the long term? Could it, just maybe, challenge gold's dominance?
Now that is a question for the ages. I guess we'll have to wait and see how this all unfolds. But one thing's for sure, this Bitcoin versus gold debate isn't going away anytime soon. So keep those questions coming, keep learning, and as always, thanks for joining us on this deep dive.